It sounds to me almost like U.S. Bank, although it's a great organization, was kind of a safe haven move, right? You really, product wise, it got a little bit choppy, as far as jumbo offerings in the IMB space there for a while.
Yeah.
And that was something they had an appetite for. And even U.S. Bank, they tend to, and I would say all banks, I don't want to even just pigeonhole U.S. Bank. It's not about them, but banks in general tend to really come in and out of the jumbo space as their appetite sees fit. What you can lend that money at versus what you can earn on that money in other places. When that spread closes, jumbo's not as good of an opportunity, and when there isn't anywhere else to put your money, well, hey, let's lend on real estate transactions for high net worth borrowers who are also going to bring assets into our bank in that relationship. And so it does kind of seem to ebb and flow. I have felt like there's definitely times where the banks have the advantage in that space when their appetite is there for it. We're more in the IMB space. What we have to have is, 12, 14, 18 different relationships with banks because even them are going to come in and out. And so it's a little bit of a different flavor. Have you found that navigating from the bank environment back to the IMB space in today's current environment is working for you and your people and getting you the product that you need?
Yeah, no, good question. I think it was very important, as we knew while talking over the months that we were working together, that, I didn't know whether I would find an IMB that met the needs that I was looking for to service the Bay Area, to your point, because of the banks kind of having an anomaly on the market when they want to your point. But I also knew that they had one product and they're just hanging on one product. And when that decided to go up or in and out, ultimately that's when the applications went in or out as well. And I saw some things as well too that I didn't care for, when they let go of a whole bunch of their producers that had been with the organization for a long time, it just showed that I could be replaceable as well.
Right.
And I didn't care for that. But my people are thriving. Ultimately the people that followed me, from different organizations aren't, all heavily jumbo as well. So, I encourage those that are out there that, maybe don't do, more than 25% jumbo to consider looking at, an IMB, because you don't want to be pigeonholed to the rates of a bank consistently when you can create your own brand and your own business by just pivoting slightly to additional products like non-QM.
Well, that's exactly what I was going to say. I mean, it seems to me like the world today, non-QM to me is a bigger opportunity than the jumbo space. Obviously, we're in Seattle right now, and thanks for coming up.
Yeah.
We're up here in the Seattle market. We need good jumbo product, but non-QM, it seems like, is really this emerging market. It's been kind of trickling along for really years, but now it's definitely, I know a lot of people who've made it 25-30% of their business is non-QM. Some people even more than that have really specialized in it, and you're not going to get access to that much product diversity in a bank. So to your point, if you can just pivot a little bit, and I think a lot of people that are in the bank space know that, hey, it's like you look at your book, you're like, oh, I do 60% jumbo. Well, part of that is because you work at the bank and everyone knows that you have the product. And so it does kind of feed on itself, where if you were to pivot a little bit, make it known that you have, some diversity of product, chances are your percentage is going to go down and you're going to ultimately do more business.
Well, and 70% of the business nationwide is done in the IMB space as well. So you got these microclimate environments like Seattle and Silicon Valley that are a bank-driven markets. But I think that, to your point, there's other solutions. We can offer 10% down. Ultimately that's not being offered with many or any bank institutions today, and that allows people to take that income, like you've shared on your other podcast, I believe. Where you can use that money and reinvest it. And these are solutions that we're offering. And I think that what we have to just try to do is allow these loan officers to create a brand for themselves. When you're at the bank, they have to market a certain way. They have to be a certain way. They have to dress a certain way. We're our authentic selves. We get to do and be who we want to be, and that's what I believe is important for our future.
That's a really good point. I think the ability to, everyone talks about creating your own brand, and it's difficult to do when you're working for, a bank who doesn't allow you that flexibility.
Right.